Time for another stock review. This time we're talking Instacart. We're talking fruit and vegetables. And let's see what we find with this company. So we're going to dive deep into the figures. We're going to look at the numbers, the balance sheet, see how it all adds up from a point of view of an investor. We're going to share with you all the facts on the stock, look at the information, who's buying on the inside, who's selling on the inside, give you a profitability score, give you a solvency score, look at all the numbers, the margins, compare it to the competition, take a deep dive as well at the website, see what it's all about, learn from the company, how does it all work, and then we can make an informed decision whether it's right to buy this stock or not. So we're talking fruit and veg right now. So it's our very first time we've looked at this stock. So please subscribe and ring the bell if you like this. Tap the like button if you like my video. If you don't like the video, please hit the down like. That way you won't see my content anymore and you'll find what you're looking for. We're trying to build the most engaged members on any channel. We want everyone to share our videos and be part of it. Leave comments and I will reply to all my members. If you want a review like this, I will do one for you. All you got to do is comment below any one of my videos if you're a member, and I will make it for you using the most advanced algorithmic software. It's unbiased. No one pays me to make these reviews. It's based upon numbers and numbers alone. And we can determine whether Instacart is a good buy for us. Okay? So there you go. Let's get straight into it. We're talking Instacart now. So we're going to start nice and straightforward. And we're going to get deeper and deeper as we go. Does this company make any money? What do you think? We'll look at the charts, we'll look at all the numbers and see if it makes sense. So Instacart, and away we go. Let's start with it right now. So we're going to start nice and simple. What is Instacart, first of all? Well, if we look at the basic line chart, you can see the stock has basically fallen off a cliff, gone sideways and heading down. But what is it? Maplebear Incorporation, that's another name for Instacart, by the way, engages in the design and development of an online application that offers grocery delivery and pickup services. The firm offers Instacart, which enables users to connect with personal shoppers in the area who pick up and deliver groceries from local stores. The company was founded by Apoorva Mehta, Brandon Leonardo, and Max Mullen in 2012, and is headquartered in California. The listed name is CART, Maplebear, common stock, and if we look here, the CEO is Fiji Simo. So if you're watching now, anybody involved with Instacart or you invest with them, please do contact the investor relations or contact for their social media and invite them on my show. I would love to interview them. I do a whole series of Meet the CEO where I will share the story of Instacart. We rank for the word stock. I'm sure we'll rank for Instacart stock very shortly. And we'd like to spread the news of great companies. So if they'd like to be on the show, I'd love to learn more. Get them to contact me. Employees, 3,486, based out of California, founded in 2025. It's regarded as low risk if you're using margin to buy this stock. $6.71 billion. It's a decent sized company then. 52-week high is $42 and 52-week low is $22.13. So quite a swing there. Price to earnings ratio is negative 3.78. No dividend, just a growth stock. Very low volume, 2.39. So if you are trying to sell the stock and it drops, you could be stuck in the stock. It's a low volume stock. I prefer high volume stocks. There are benefits to low volume though. It might mean that no one is selling. It just sits there and goes sideways. I don't know. We'll look into it in a few moments. Analyst ratings. This is from Morningstar. Now, I don't like to use analyst ratings like this because they're paid, influenced. It doesn't really make any sense to me to use this, but people like to see a visual, and it sort of gives you the idea that it's a buy or hold, you're not selling it. That's done by Morningstar. Okay, we've got very limited information here, not that many earnings, of course. We started okay, and we've gone down in Q4 of 23, and we're expecting our earnings on February the 13th. And if a number of people want me to cover the earnings, then I can cover the earnings. Okay. Who are we in bed with? So in other words, who are we investing with? Other people that hold this stock also hold ARM Holdings, Robinhood, good company, but very volatile though. A lot of negativity towards the CEO. Vlad Tenev, Rivian, bit of a gamble really, that one. Vito Coco, I don't have any information on that. Argo Blockchain, I don't like this at all. I like what they're trying to do, but I don't like the company. And Amazon, of course, a fantastic, one of the best companies in the world. Okay, that's an unusual mix from some really mega caps down to Argo Blockchain. Interested in that. So that does give us, in fact, that doesn't really give us too much, to be honest with you. If we see some really bad companies in there or solid companies, we get an idea, but we've got a bit of both here. So anyway, let's move on now and look what is Instacart. Let's see how it works. Okay, so first of all, how does Instacart work? You're busy, so every minute counts. Let us connect you with shoppers in your area to shop and deliver items from your favorite stores in as fast as an hour. It's just that easy. How does Instacart work? Right, well, it's simple. That's what it says. It's simple. Using the Instacart app or website, you can shop for groceries and more from a shop near you. After you have placed your order, Instacart will connect you with a personal shopper in your area to shop and deliver your order. Contactless delivery is available with our leave at my door option. You can track your orders, progress, and communicate with your shoppers every step of the way using the Instacart app or website. Shop your favorite market, schedule delivery, and get your groceries. Now, straight away, I'm thinking, well, why can't you just order directly with the company and have them deliver? Why do you need to find somebody who's going to basically be a middleman and go to the shop for you? It's basically, it sounds to me like you've got a family member that is helping you out. Maybe you're an elderly couple or whatever. You don't go shopping anymore, and you've got one of your grandkids go into the shops for you. I don't know. That's what it sounds like. But anyway, how does that compare? Again, this is why I'd like to hear from the company, get some reviews here, get some thoughts. Shop your favorite markets. Instacart partners with the most popular and national regional retailers such as Albertsons, Aldi, Costco, CVS, Kroger. I think we get the idea. You just go anywhere, really, won't they? And is it Wegmans, among others. The Instacart's marketplace offers more than 1,400 retailers and trusted local grocers that customers love. Shop from your favorite national and regional grocers with your computer or mobile device. Schedule delivery for as fast as an hour or for later in the day or week, so to fit your schedule. Delivery windows start as early as 9 a.m. and run through late as midnight. Check local store hours, delivery hours, and subject to store opening hours, which includes holidays. Get your groceries. Meet your shopper at your door to get your groceries. The Instacart platform also offers a pickup option. You simply shop at Instacart's website or app, select a pickup time, and then pick up your groceries at the store, available at selected locations. Now, I'm guessing there, not all stores deliver. So essentially, you could shop at your local grocer who doesn't deliver, and someone goes and picks up your goods for you. Okay, that's basically how it works. That's kind of what it is. Now then, these are some of the partners, of course, all your main brands, Aldi and Kroger and everybody else, Market Street, Target, Sam's Club. We get the idea. So does this company make any money? And is it a good as an investment? Well, that's what we're going to go on to now. And just after we get this latest news, we will start looking into whether it all makes sense, and then will all the numbers add up, and as investors, will this make sense? Okay, so let's have a look at the money. Just before we do, though, we're going to look at one final bit of news. So here we go. This is the Instacart and HHS launch public-private partnership to scale food as medicine programs and improve health outcomes across the United States. Instacart Health. Let's have a look at that. January 31st, just a few days ago, Instacart, the leading grocery technology company in North America, and the United States Department of Health and Human Services, HHS, today announced a new public-private partnership to support and scale food as medicine interventions, including by increasing access to nutritious food and offering the tools needed to support better health and well-being for individuals and families across the country. Through the partnership, Instacart and HHS will seek opportunities to support food as medicine programs, research, outreach, and policy priorities that improve health outcomes and health equity across the United States. Together, they have committed to engaging and educating the public on the power of using food as a medicine. Advanced understanding of food as medicine, intervention techniques and impacts among key public and private sector stakeholders, and developing new approaches to scale successful food as medicine programs to reach more individuals and communities. All right, some latest information. Now let's go, as promised, straight into the numbers, starting with the intrinsic value. We're going to start with the intrinsic value and see if the numbers make sense. See if the money adds up. If it does, maybe we can invest in this company. Let's get straight into the intrinsic value. Okay, here we go. If we look at the intrinsic value, it says on the base case, we are currently overvaluation. It's only actually worth $14. Best case scenario, we're undervalued by 34%. And worst case scenario, we're overvalued by 46%. However, we have a warning here because we don't have enough metrics from the company yet. Cart's intrinsic value estimate is unreliable because it is based only on multiples and doesn't use a DCF valuation. So we can't make an informed decision based upon the intrinsic value alone. Sadly, the intrinsic value here isn't going to provide us with what we need. So we need to go a little bit deeper into this stock. Okay, let's go down to the fundamentals of the company. Look at the numbers. Right, well, we've got 4.8 billion on the most recent range, up 19%. Good, that's good. Operating income, well, that's negative at the moment. Has been better, but now we are negative, minus negative 2.1 billion. Net income, negative 1.9 billion. Free cash flow has moved up 20%. Capital expenditure, we're obviously spending a lot building out the business. Negative 64 million, that's an increase of 33%. That is very significant. Operating cash flow is up 21%. Okay, let's look at our balance sheet. It looks to me like a healthy balance sheet at first glance because we have more assets and liabilities. What about the cash? Out of 4.4 billion, half of that is cash. Very, very good. So we're in a position we haven't used the cash, or we haven't spent it all, or it's not just equipment that could depreciate over time. We have got 2.1 billion in cash. Good. What about liabilities? Well, liabilities, long-term debt. There's the good news. No long-term debt, no short-term debt. So we've got a nice situation there. That's a very, very nice balance sheet. Company are not going to go bust anytime soon. We've got plenty of cash on hand. In fact, 2.1 billion, no long-term debt, no short-term debt. That's a very nice balance sheet. That's what we want today. So that's a buy from me. That's good. Well-funded business. Okay, gross margin 62%. Sounds good, but we need to compare it to the competition. Is there anything else like this? Well, we'll find out in a minute, and I'll give you links where you can go and compare the competition so you can decide whether it's right for you. Operating margin is down 44%. Net margin is negative 39%. FCF margin is 12%. So there you go. That gives you the efficiency of the company. Now, this is what we're looking at. See, look at that. Solvency score 81. They are very, very well funded. They're not going bankrupt at all anytime soon in the long term. They've got plenty of cash, no debt, very well funded business. That's very rare. You see that these days. Everything is a green tick. High Altman score, short-term solvency, long-term solvency, and low DE. That's fantastic. Profitability, other than low 3-year average ROIC, we're looking very nice indeed. So profitability is okay. If we can fix that, then we'd be in the green there as well. So this is good for a new company. Very, very good indeed, actually. Wall Street are giving it a 46% upswing on average. The low is 10%. So, you know, it compares with the S&P really, and a potential much more, even 110% if we look at the higher end. Anyway, very nice indeed. Now, competition-wise, I'm going to give you the link for this at the end of the video where you can go and literally click on my software and have a little look at yourself compared to the competition and see if anyone else has a better valuation for you and a better prospect. But that balance sheet looks pretty good to me. Anyway, look at this. Who's buying on the inside? Well, here we go. During the last 12 months, Maplebear Incorporated insiders bought 30 million and sold 21 million. So what does that really mean? Well, it's a mixed bag, really. They're buying and selling at the same time. There could be lots of reasons to do that. What we don't want to see is just selling off. And what we also don't want to see is too much buying in, because if the company have already bought in, we've had a bit of a rise and maybe it's now not the best time to buy. But I try to look for a company to buy before insiders have started buying, but it's a mixed bag, so I can't really say too much. It's more buying than selling, only just, but doesn't really tell us too much, I don't think. Anyway, let's look at the short interest. Do we have any short interest? Well, we do have 4% short interest. So it's significant, but not excessive. 20% is when you start thinking about short squeezes. This stock doesn't have a great volume, also nowhere near enough. There's a bit of short interest, but nothing dramatic there at all. Okay, latest news. Let's have a look on the latest news. My reviews will be here in a couple of days' time on Alpha Spread. They put all my reviews next to Bloomberg, CNBC. They cherry pick theirs. They use all of mine because they're open and honest, which is great. Let's go and look at Instacart and hear what we have here. So let's have a quick listen here from the CEO. It looks like. Here we go.
So about 2 years ago, we acquired this company called Caper. It was my first acquisition as CEO. And what they do is create smart carts where the cart automatically identifies products as you drop them into the cart. And you can check out directly from the cart. And you also have a screen that helps you in your shopping journey by making the shopping journey more personalized, more fun, more like an adventure and a treasure hunt.
Okay, does that incentivize a shopper to buy more when they're using a Caper cart? Have you been able to see in the couple of years that you've already made the acquisition how much it makes me spend a little bit more?
So usually we do see an increase in basket. It varies greatly depending on the retailer, the use case, but people find it really fun. And so they tend to add items to their cart. They see recommendations on the screen, so that allows them to discover new products. And then they don't have to spend time at checkout in line. So that gives them more time to spend browsing the aisle and potentially discovering new products. And now with the launch of advertising on these carts, we're going to be able to have really personalized, really relevant product recommendations on the screen, so that if you're dropping a box of cookies into your Caper cart, we might be able to recommend Dreyer's ice cream so that you can make ice cream sandwiches.
Okay, so you've already got a few brands that are going to be using this already, as you mentioned, ice cream brands that are already on top. Del Monte Foods is already in part of it. What is the uptake like from the retailers themselves? How many have wanted to get in on a Caper cart?
So we have a lot of interest from retailers. Now you can see caper carts deployed at Kroger, Wakefern, Good Food Holdings, Sobeys, Schnucks, and many more, from Santa Monica all the way to Manhattan. And we think in 2024, we're going to have thousands of carts deployed. And the reason they're really excited to deploy these carts in store is because customers love them. We have a net promoter score of above 70, which is very high. And we hear over and over from customers how fun the shopping journey becomes when you're using these carts and how convenient it is. So we really believe it's going to be the future of grocery shopping.
There you go. There's a little bit of information there from the CEO. Let's now look at the sentiment around the stock. So we've got over the last 90 days, only 11% negative, 20, I think that's 28% positive. Last 30 days, hardly any negativity at all, 20% positive, and then neutral news. Last 7 days, neutral and good news, no bad at all. And today, just neutral news. That's good. So that's all looking promising. So there we go. What do you think of Instacart? Is that one for you? Does that get you to get your credit card out and make some purchases? What do you think? Is that for you? Well, leave me your thoughts in the comments below. I'm going to give my final thoughts on this. This one, I'm not going to give it a buy or a sell. I'm going to put it down to more research, I think. I'd like to hear from the company themselves. Perhaps they'd like to call me. I'd like to learn more about this. Why would anyone use this if you can just have delivery from the company? Anyway, that's what I want to know, and compare the price. How much is it going to cost for the company to deliver as opposed to having your personal shopper? We'd need to know more information about the profitability of this company. But anyway, there you go. It's one for more research. Leave me your thoughts below. If you'd like any of my links, if you want to contact the company and have them call me, all my details are above and below here in the description on the all links button above my head, martynlucas.com/links. You can find the access to this software that I use, like I talked about. My members can get a lifetime discount, basically making my membership completely free. If you want to get a premium version, if you want to get the free plan, it's completely free to use it as well. You can do that using my link. Over here, I'll give you more of my reviews. I've done many companies now, and we rank a lot for them. So when we talk about them, and it's a positive review, the stock tends to go up because the reviews are honest and fair, and we get a lot. We draw attention to a stock, and I love to hear about great companies, great businesses. So if this company would like to reach out to me, I would love to have them on the show with Meet the CEO. Anyway, that's it for today. Until next time, as always, take care of yourselves and each other. Oh, by the way, did you smash the like button? I nearly forgot there. Tap the like button, subscribe to the channel. Can't forget that. As always, take care of yourselves and each other.